Alright, welcome back to another video on the After Hours channel. In this video, we're going to be doing a full portfolio update. And not only that, but we're going to be taking a look at all of my stocks right here, and I'll be going through each one of them, and I'll be telling you whether I think they are a buy, hold, or sell right now. And not only that, but we'll be taking a look at my recent dividends in this account right here. If that sounds like something you're interested in, then stick around. Kicking this thing off, we'll look at the all-time performance of my portfolio. It is up 53% or $32,000. As you see, it has been a crazy couple of years to be an investor. We've had some high highs and some low lows, but it looks like the portfolio is trending in the right direction now, so I couldn't be happier. As for my year time performance, the portfolio is up 45% or $29,000. So again, doing pretty well. If we check out the 3-month view, the portfolio is up just over 8% or $7,000, so a pretty good gain so far. 1-month view is looking relatively flat, only up 1%, which is almost $1,000. And if we look at the returns for the week, completely flat. And if we switch this over to the day, we can see the market is actually down right now. Portfolio is down just under 0.5%. As I mentioned, all of my stocks in this portfolio are right here on your screen, and they're broken down into the weighting. So starting at the top, we have Microsoft. I have $25,000 invested in that company alone. And then all the way at the bottom, we have United Health Group with over $6,000 invested. I'm going to go top to bottom telling you which stocks I think are a buy, hold, or sell. First on the list, we have Microsoft. It has had a crazy run up this year, up 64%. As I mentioned, I have a huge holding in this position, $25,000 with a return of $8,300 or 48%. This holding alone makes up 27% of my portfolio. Heading down to the analyst ratings, which is an integration on Robinhood with Morningstar. Out of 52 ratings, 90% say it is a buy, 9.6 say it's a hold, 0% say it is a sell. And now that I think about it, that's probably the most analyst ratings I've seen on any company. Putting that aside, let's take a look at the research report and more specifically the fair value they have for Microsoft, which is $370 per share. So again, Microsoft is currently trading at $372 per share, so it looks like it's just overvalued by $2. Nothing extreme, but I thought you'd like to know. As for the economic moat of this company, they have it as wide, uncertainty medium, and stewardship exemplary. Now, this isn't going to be a full deep dive video into all of these companies and why I think they're either overvalued, undervalued, or a hold, but we can take a look at some of the numbers real quick. So starting with the value section, we can see the current PE is 35 with the forward PE of 32. So definitely on the higher side for Microsoft. All in all, after researching this company for years at this point now, I do think Microsoft is a hold. I'm not going to be selling any of it, but I'm definitely not going to be buying any more until I see a substantial dip in the future or there's major changes with the company that would warrant me buying back in at these elevated prices. This is an amazing company. I'm going to continue to hold it for the future. Next on that list, we're going to be covering Apple, which is currently trading at $184 per share. Similar to Microsoft, it has had a huge run up in the last year, up over 40%. For full transparency, I have over $20,000 invested in this company with a total return of $5,700 or 40%. This holding alone makes up 21% of my total portfolio. As for the analyst rating, it looks like it has 44 ratings, 59% saying it's a buy, 31% saying it's a hold, and 9% saying it is a sell. As for the research report, it looks like they have the fair value at $160 per share. Economic moat is wide, uncertainty medium, and stewardship exemplary. So in Morningstar's eyes, this company is well overvalued. Switching over to Qualtrim real quick, take a look at the valuation section, and the current PE is 30 with a forward PE of 28. So I would agree, just based on that alone, this company definitely is overvalued. And as I mentioned before, this is not a full analysis on these companies, so believe me, I'm not just looking at PEs and if they're high saying it's overvalued. But with the extensive research I've done on these companies, I kind of have a grasp on where they're trading at right now. And I would have to put Apple in that same category as a hold. This is not a company I'm going to be buying right now. I think it's had a huge run up this year, and I wouldn't be surprised surprised if there was a fall shortly after, which we're kind of seeing now. But then again, this is not a company I'm going to be selling either. I think it's an amazing company with a lot going for it, so I'm going to continue to hold it in my portfolio and wait for any major dips similar to Microsoft. And before we jump off of Apple real quick, we can see that the Apple shares are trading higher after the company announces its Vision Pro headset will be available for the United States on February 2nd. This is that headset that everybody was talking about, trading around that $3,500 price point, so not cheap by any means. So we could see a jump because of this. Next on the list, we have SCHD, or Schwab's US Dividend ETF. Similar to Microsoft and Apple, I have just under $20,000 invested in this ETF alone. I'm completely flat on the holding, and it makes up 20% of my total portfolio diversity. Now, since it is an ETF, it's very difficult to value, especially one with 104 holdings. Nevertheless, we can take a look at their top 10 holdings right here, which make up over 40% of the total assets in this ETF. Feel free to pause the screen or take a screenshot if you would like. Some other noteworthy information: the current yield on this company is 3.57, so definitely on the higher side. This is a huge dividend payer in my portfolio, but I do have to say I do think this is a buy. There's not many times that I think this company is a hold or a sell. I think this is a great ETF to park your money in, let it compound over time, collect some of those dividends, and if you see better opportunities in the market present themselves, you can pull some of that money out and park that money right over there. That is kind of how I view this ETF and why it's in my portfolio. I view it as a low volatility ETF that kind of offsets the volatility of my portfolio, especially because it's so concentrated in only a few positions. But that is just my thoughts on this. I do think it is a buy right now. Next company we're going to take a look at is none other than VICI Properties, which is currently trading at $31 per share. It's had a pretty rough year so far, staying relatively flat. I have just under $11,000 invested in this company alone, with a total return of $575 or 5.5%, and this company makes up just under 12% of my total portfolio. Let's see what the analysts are saying for this company, and it looks like they have it as a buy with 87%, 12% saying it's a hold, and 0% saying it is a sell. Now, Morningstar does not give a fair estimate for that company, so we're going to switch this over to a subscription I have, which is Barron's. So again, we can see it's currently trading at $32 per share. Their analyst ratings have the price target for VICI at $35 per share. So it looks like it's still trading under that price point. And if we switch over to the value section, we have the PE of 13 with the forward PE of 11, so definitely on the lower side. And I just did a full video breaking down this company and Realty Income. If you want to go check that out, you can click the video at the top of the screen. But all in all, I would agree, I still think VICI is a buy. Now, again, this is a very levered company with a lot of debt. So if you're not comfortable with that, I would definitely do your research before buying in. But overall, this is a great dividend paying company with the current yield of just over 5%. So you're going to be paid out those large dividends. I have been continuously buying into this company probably over the last 6 months. Not any major purchases, but just some cash here and there. Next on the list, we're going to be taking a look at Visa, which is currently trading at $261 per share and up just under 20% for the year. So not a huge run up like we've seen with Apple and Microsoft, but a substantial one nevertheless. I currently have invested just over $10,000 in this company with a total return of just under $1,000 or over 10%. This holding alone makes up 11% of my portfolio. Again, we will take a look at the analyst rating, and it looks like out of 39 ratings, 79% say it is a buy, 20% say it's a hold, 0% say it is a sell. So I feel like the Morningstar analysts are pretty bullish. There's not many companies I see that they have rated as a sell. As for the research report, they have the fair value at $260 per share, the moat as wide, uncertainty medium, stewardship standard. Switch this over and take a look at the valuation section. PE is 31 with a forward PE of 26. So it may appear on the higher side if you haven't researched Visa or you haven't looked up their historical PE, but they trade usually around this range. So there's nothing out of the norm for this company right now, and in my personal opinion, I still think it is a buy. Now, would I be making a huge huge purchase of it right now of $5,000 or $10,000? No, probably not, but I would probably DCA into this position, which is exactly what I'm doing right now. Again, I just made a video on this company comparing it to MasterCard, and which I think is a better investment. So if you want to check that video out, you can click the link at the top of your screen right here. But with that out of the way, let's move on to the last company we're going to be taking a look at today. And that company is United Health, currently trading at $537 per share. So a decent gain this year, nothing out of the norm, nothing too crazy. As far as my market value, I currently have $6,800 invested in this company, and I'm relatively flat as far as investment goes, and this holding makes up over 7% of my total portfolio. We have 27 ratings for this company. 70% say it is a buy, 18% say it's a hold, and 3.7 say it is a sell. As for the research report, it looks like they have the fair value of this company at $520 per share. Economic moat as narrow, uncertainty medium, and stewardship exemplary. So taking a look at that fair value, obviously United is over that right now. It's over that 520 mark, so in their opinion, it's slightly overvalued, but let's take a look at their current PE to get a better understanding of what's going on. Jumping over to Qualtron, we can see the current PE is 23 with a forward PE of 19, so definitely on the higher side, but in my opinion, I still think this company is a buy. I'm not going to make you guys wait anymore. I've been buying into this company for the last few months now, and if there's any major dips in the future, you can reassure yourself I'll be making some larger purchases. As promised, we can take a look at some of my recent dividends for this account. We got VICI paying out $142, Microsoft paying me $51, United Health paying me $20, and SCHD paying me over $186. So these aren't life-changing dividend payments, but believe me, they're enough to get that snowball rolling. I've been investing in this account since late 2019, so believe me when I tell you these dividends are accounting for a lot of extra capital being put back into this account. And if any of you are wondering, I do not have DRIP turned on for any of these holdings. I like getting these dividends, they get put right into my account, and I like to choose where that money goes next. If you're not familiar with DRIP, it's the dividend reinvestment plan, and essentially it'll just keep buying back into the same company that paid you that dividend, but in some cases that company is a little bit overvalued and I wouldn't be buying it anyway, so I'd rather have the cash and pick exactly what position I want to buy back into. And that is going to wrap this video up. It's a quicker video, just wanted to do an update and let you guys know what's going on and some of the holdings in my portfolio in case you hold some of them as well or you're interested in buying into them. If you made it to the end, I appreciate your support and I hope to see you guys in the next one. Take care.